following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, of course, being Tuesday the 9th of Feb. We start off at 7 with Nico and Paige, go all the way through, just great shows. Let's hope we can keep that standard up all the way through this hour. And of course, you got your swimming lesson straight after me. Let's go to the numbers. Down 78 at 15,949. Oh, before I forget, tomorrow night, I believe it is, no, Thursday night, I believe it is, Steve Rhodes is going to be doing a webinar. You know, Steve likes to put all the pieces of the puzzle together, tries to take what he thinks are the critical areas of certain techniques, and he puts it together to make a potpourri of ideas, and that should really be very interesting. Of course, he does use the Chapman Wave. He uses the seventh wave within that. And he's got techniques that he uses to go with that. And of course, as you know, in the seventh wave, it's where we got very often an alternate wave. In the Chapman Wave, that's often it's G/C, either on the downside or the upside. Alternate wave, which means that you've got to, as long as the technicals are confirming the direction, you don't really have to do anything because it's going to give you a tremendous amount of information. I have a whole bunch of, when I do my webinars or my Master Trader series, we spend a lot of time on that alternate count. There are a lot of different things that go into it right there. Very often, the Chapman Wave methodology is just a real simple technique. Identify the lowest low bar and expecting higher peaks to come. And if it can get to a C, invariably it'll go to a D. But when you get to a C and it starts to fail, right here in the E-mini, C at 1940, doji candle, and then it starts to turn around, you've got to be careful. If the technicals fail, it can go to a C minus. A C minus is very negative. It invariably implies not only are you going to take out the left side low, but you're going to not test the left side low, but you're going to take it out. We'll get into that. It's a whole bunch of things we have to do today. Meantime, the E-minis are down 11 at 1840, and there it is, potential C minus in the weekly, in the daily. The weekly is a single leg A up, failure pattern. Got to be real careful. And then just move this away to show you the arch formation unfolding in the 120. But I'm going to go to the S&P cash because I want to show you something that I spent a lot of time on, a very lot of time on this past weekend, sending charts out to my subscribers to say that Chapman Wave Roman candle, the second Chapman Wave Roman candle in the monthly charts of the Dow and the S&P, many of the other indices as well, it's got to be really important because if it starts to trade below 16,000 in the Dow, and what did I say? I think it was 1880, what was it in the S&P? I think I said 1890, somewhere around 1890. You've got to be careful because the history of this particular chart formation, I call it the Chapman Wave Roman candle, right there. There's one Roman candle right there. That was the August. And then you got the January candle. Same sort of thing. Look, I like the very long ones. Those are the ones that give you the best reading, especially off the top. And that says if you trade into the wick, halfway into the wick, for a certain period of time, in a shorter time frame, that is, there's a real good chance not only are you going to test the low, but you're going to break the low. That's where we are, even though there could be a bounce. They're desperately trying to get a bounce in today, but the bounce should be transitory. Okay, so let's go on with that number. So the S&P is down 5 at 1848, not as weak as the actual futures. In a sense, that's a positive. So here we go. You've got the S&P at 1848. There's a little Roman candle. Right there, Chapman Wave Roman candle, but it's closer to the lows, so there's a whole other implication there. But meantime, the technicals are very poor. Let's see what happens by the end of the day. Excuse me. So here we go. The Dow, INDU. The Dow is down 60 at 15,966, making that arch formation, what we call the H, lowercase h, that looks like an arch formation. But the MACD has not yet crossed a negative. It is turning down, but it hasn't crossed negative. Stochastic is under 80% at 69. And that says, yes, you might get a bounce still, but the weight, the WEIGHT, the weight of this particular pattern suggests that there will be a test close to the 15,459 low. Was that 0 or 9? Yeah, that was a 0. Why did I type that in? That should be a 0 right there. I thought I recognized the mistake. Okay, so what's the upside? The upside is all the way to 16,165, the 9-period exponential moving average. Wouldn't surprise me if there's some kind of attempt to get at least to yesterday's high of 16,147. Once you get there, it's just a hop, skip, and a jump to get to the 16,167. I can just tell you this, that the VIX index, we should do that right now because intraday, you got another bounce attempt. So this is leg B in the inside Chapman Wave buy signal. It's not really a buy mode yet. And the high was 32.09, the low was 19.50, and the VIX right now is at 27.08, up 1.08, having hit 28.31 this morning. So it's pulled back quite a bit. We'll see what happens. Yeah, day's young. But the weekly chart is really suggesting, very strongly in fact, that there will be a leg D above 32.09, and that should occur, 32.09, yep, 32.09, and that should occur within a week or so. Maybe less, but within a week. Okay? So let's go back to the S&P, SPX.X. There we go. And it's down. Now it's only down 0.54. Oh, nice comeback. Look, the Dow's down, only down 19 right now. S&P's down 46 cents, 39 cents, 35 cents, 34 cents. So somebody must have said something. 0.32, 0.17, 0.14. Will it go positive? Would it go positive? Going around the corner, Saratoga Springs. I just told our Saratoga Bob in the den that I just read. Let me find it. Larry Pesavento was talking about Bernard Baruch, very fascinating guy. I've spoken about him many times, and I've got a book. I don't remember where I got it from. I think I got it in a little bookstore in Newport, Rhode Island. Mr. Baruch, the man, the myth, the 80 years, by Margaret Coit, who was his secretary. And it's fascinating. So I suddenly find something that says that Bernard, here we go. Here we go. Under his inspiration as chairman of the Saratoga Springs Commission. Did anybody know this? Anybody out there in Saratoga Springs? New springs were unearthed, $8.5 million worth of buildings erected, and the whole resort given a new lease on existence. There were disappointments and drawbacks. For one thing, private funds after October 29 dwindled away almost as fast as the resort patrons, whose cures could wait until the recovery of the stock exchange. Yet as the nation sagged deeper into depression, the rebuilding of Saratoga went on. A medical director was to be chosen, a $300,000 bottling works to be built. $300,000 in 1929, 1930, unbelievable. A new 75,000 bathhouse completed, and even that seemed inadequate. As a resort of cardiacs, not for the lungs or digestive difficulties, Saratoga, if it did not become another Baden-Baden, you remember that's that famous, the Baden-Baden in Germany, is it in Austria, or Vichy, sustained a shot in the arm, which gave it at least some semblance of health for another generation. What this Bernard Berkeley was just a fascinating guy, but I was looking for something about Churchill. Meantime, back at the ranch, gold is, let me just quickly check here. Gold is down 4. We'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Of course, I have no idea how I got off onto the Bernard Brook at Saratoga Springs. I believe, that's because Larry had mentioned Bernard Brook. Okay. So we got a couple of other things going on here. Look at the QQQ. QQQ right now is down 22 cents at 96.40. It broke the left side support. Remember the lowercase h, maybe in the next break, if I even remember, I'll try to put up my CD to talk about these patterns again. It's very important. The arch formation. Now, what we're looking at is that the Roman candle of January, and certainly this most unusual Roman candle of August, we are starting to trade into the middle of that wick. We've already taken out the one from January in the QQQ series, the Power Shares QQQ Trust. But if this index starts to trade at, let's just say under 101, and it's trading now at, so that'll be 101. Oh, I didn't mean that. Sorry, I knew that was wrong. 96. And we're at 96.44. If it starts to trade in this area even another day, the drag on this wick is going to be really strong. And it's going to suggest that the very next level will be the 90.24 low of October of 2014. So it's going to be really important within the next 3 days for the Dow, the S&P, and especially the NASDAQ, where it's got the index 100, has the Amazons, the Googles, the Facebook, it's just Netflix. It's just really important. And the IBB. It's really important that there is some kind of rally that has some duration to it. In other words, the upside is no good just to bounce and then fail and retest and make a lower low. It has to make a series of at least 2 to 3 higher lows and higher highs between now and Wednesday to Thursday next week. And one of the reasons is that if there was a fall right now, in other words, if the cascade later today, if there's no bounce, but instead we go back to the lows, the disappointment in the market is going to suggest that the VIX index, VIX.X, the volatility index, of course, you got to type it in. Go after all these years, you think I'd be able to look at the screen and not the typewriter. 27.19 up $1.19. It would suggest to me that if the VIX starts to go into the moment it starts to get into the 28s and holds you're really looking at the 30s as the next step. So it's important that by the end of the day, let's look at the 120-minute chart. Yeah, by the end of the day, the VIX starts to up the legs. So 2770, 72. So this is leg D, and that's important. You want to get to a D, and then you want to turn around. That says that there's a chance that we could see a turnaround to the upside a little later today, based on the volatility index, short term. No, I would even say near term, because if this VIX index goes back into the 28s and holds there, that's just going to be so disappointing to the market. You will just see new sellers come in rather than buyers. So this is going to be very important, that the VIX volatility index in leg D right now, and 81% in the stochastic, and the MACD still looks good. It's imperative that there's some kind of a pullback in the VIX starting right now. In fact, as we speak. Let me go to the 10-minute chart. Yep, this is going to be very interesting, because the EE mini is showing that it really wants to hit the 1848 level, which is the 200-period exponential moving average. If it takes that out, as we're speaking, it's moving. And if it takes it out, it'll want to go back to that single leg, which went all the way to the 4 o'clock this morning high of, I think it was 1856.75. And we just hit that earlier on in that V-shaped pattern. So this is a very important moment. Now, let's just go on with our story. Gold is trading at, it's down 5 at 1192. Leg E, I would not be surprised if we get a pullback here in gold, and the dollar DXY actually starts to rally. Boy, that looks horrible. At 95.94, at least has a bit of a bounce back to the 200-period moving average of 96.64. When the dollar trend changes, boy, it can really change quickly. And look, it hit a high just recently of 99.83 on the 29th of January, and kaplop, peak D. What do you think? What do you expect in a Chapman Wave peak D? You expect you could get a very sharp pullback in time and price. You're getting that here. So I'm looking at this. I'm saying, then gold might just have a bit of a pullback if the dollar can't rally. All right. I was asked about the EUR USD. I think that's the question. And is this a rally? Is this more than like a 2-week rally? No, I think it's got something else to it. I would not call it a 2-week rally. I would say that this is a rally in the euro that has the potential to make an even deeper cup formation. And then if the euro, on any bounce in the dollar, if the euro, I'm calling this leg E for now. It should be really a potential instant restart. But I'm just going, no, I'm going to do it exactly the way I would do it. It's E/A. All right? That's the alternate count, and that's really important to learn how to use these. And what it says is the technicals at 88% in the stochastic and the MACD is still strong. Tell me that I don't have to get too carried away here. I can call it E/A, even though at this particular point, it's going to take a lot for it to start a whole brand new leg B, leg C, leg D. But give it the opportunity to at least try it. And what we're looking at here is left side, right side price time match going to that level right there. That means it would have to be very quick, wouldn't it? So that doesn't make sense. If gold is pulling back a little bit, it's only down $6. There you go. So that says by the 18th of February, the euro, that's a long time, isn't it? The euro should be testing 1.149. It's got a 1.49 to 1.50, 1.15. So that's looking very good for the euro right now. And yes, it's a rectangle formation question. Yes, there's a rectangle formation in the weekly chart, but why don't you rather think of it as the second H pattern going to a lowercase m pattern? So the H is going to an M, and that just makes it real easy and says there should be a test if you get into halfway of this wick right here of the week of the 28th of August. If you can get in, if the euro dollar currency pair can get into the 1.149 area, then there's a really good chance that it's going to try to test the high of 1.171. Let's just look at it that way, as the H within a rectangle formation going to potential M. Tag 1.17 was a question. Yeah, that's what I just said. Yes, that's right there. All right there. And that could make leg C, leg D. We could even get an overlapping wave. Since this is a weekly chart, maybe next week's a little bit weak. And then the following week, you get this parallel wave C, which can go to a D. But in the meantime, it's acting very nicely. And we're going to be watching it quite closely. In the monthly chart, it's saying, yep, this is just another one of those bounces. It could be much, much stronger if, in fact, in the month of February, there's a close above 1.171, the high of August of last year. So, okay, got that out the way. Now we want to look at bonds. Look at that. Leg F/C. This is an alternate wave. And what we're looking at here is the stochastic is at 82%. That's good. MACD is still very strong and rallying. And the weekly chart is improving. Oh, it's worth taking a little time. We'll come back and we'll look at bonds. And then we'll look at some stocks. I think that would be very nice. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, just a bunch of emails coming in and texts. So let's just go through this. First of all, I want to thank you for this a bit of information. World's negative yielding bond pile tops 7 trillion. Let me see if I can pull this chart over, because this is really an amazing thing. Look at this. Let's move it up here. 7 trillion of negative yielding bonds. Remember we spoke about, I have spoken about, took the responsibility of talking about the Japanization of our bond yields 10, 12 years ago. I don't know how many years. It must be even more, 15 years ago. And this is kind of what's happening. I don't know what is the Fed thinking. I mean, they have no choice but to lower rates at some point, right? Wow. So more than 2%, 1.5%, 0 to 1, less than 0. This is amazing. Well, I must move this chart away because it hurts my eyes. It's too bright. So the TLT monthly is running very strongly. That's the Lehman 20-year T-bond fund. This pattern is kind of familiar to me. And what happens is it very often creates an arch formation, goes to a new high, pulls back very sharply, especially if it's from a peak D. Then it pulls back, and then it has a rally. And this rally becomes the most important rally historically. So this is something I'm monitoring very closely. This is the TLT. It's a little bit more than 50, not quite 60% of the from 138.50, the high that was made in December of 2015, to the low that was made in June at 114.88. So that's 24 points. So you've got 12. So 12 from this low here would be 11. Where am I? 1126, and we're at 131. So yeah, there we are. So this is, yeah, maybe it's, let me do a fib here. There we go. From there to there to there. All right, so the 129.26 level is, in fact, I can never see because it's always, that's 40% there. So it's almost done a 40%, not a 40%. Why am I saying 40%? 76.4. It has to go to 132. Let's call it 133. It's real close to that. So, okay. So bonds have had a spectacular run. And at this particular point, the technicals are just crossing positive again in the monthly, but the month has got over 2/3 to go. So we can't talk about the monthly technically, other than to say at this exact moment, it's just crossed positive, and that's a good sign for bonds. But my thinking here is that bonds have got a little carried away to the upside, but that doesn't say that because it's going vertical or parabolic that it has to give back everything. What it could do is bonds take a little bit of a breather, and at 131.25, they come back to the 128 to 127.5 area over a period of a week or two. But so far, they're showing no signs of weakness at all, other than intraday. We're down 16 cents in the TLT, but already hit 132.06. That's spectacular action. Just real quickly go to the, there you are. Look, the bonds themselves have gone. Now, this is going to be, I find this always very interesting. 30-year UST bond continuous contract has gone in another cup formation to an all-time high. It went to 165. Today's high is 167 and 9/32. Leg D looks like it's ready for a little bit of a pullback here, okay? But that monthly chart, remember this chart here, the TYX.X? I tried to type that yesterday. I couldn't get it. This time I got it perfectly first time. Look at this. I'm going to squeeze this chart. If you've never seen anything about if you do not know anything about channels, channels can last a long time. What are channels? Channels are two parallel lines. All right. Trend line, that's one trend line, and the bottom trend line is parallel, and together they make a channel. Within that, you get a Chapman Wave inside track, and it means that every time the price gets within that track there, that should be a reversal area. It is. Every single time it's been a reversal area. We'll pull it down to there. And on the downside, every time it gets to the bottom, you've got yourself a support area, and that's a propellant. The one is a repellent, and the other is a propellant in the Chapman Wave methodology. So this is going to be very interesting because from September of 1981, you made a high. I mean, I remember this so clearly. There are a whole bunch of things to why I remember it clearly. But in the meantime, back at the range, this declining, this is like, Japan went to zero, a minus rate. We are going to go to a minus rate at this rate. Countries tend to follow one another. And I don't see any reason why we don't follow that pattern. There's nothing yet that tells me that inflation's rife and that yields should start to skyrocket. Not yet. Now, if you've been to the supermarket, that's something completely different. All right. Now let's go on to the questions about oil. A lot of questions about oil. I'm going to just show you the oil chart right now. The USO is the United States Oil Fund, trades comparable to the price of spot oil, crude oil. So we've got 8.45 down 20 cents right now. And it's making that pattern, that B minus, which would be a failure pattern. So this is almost an inverted arch formation. Look, it's like a straight line and another straight line down. So what we're looking at here And I'm going to repeat it again. I don't think out of the commodities, I'd be messing around too much with oil. I just don't see it. I can see quick pop-ups. I see no reason why you, instead of spending $8.44, go to what's AU trading at, or AY, any one of those goals, AU. $10.98. What's ASA? $9.11. What is AUY? $2.41. Mess around with these little gold stocks. Let them pull back here and grab that. I don't see any reason to go to crude oil at this particular point. It's just there is an abundance of crude oil, and that's different now. Okay, so I'm done with crude oil. I don't like it. Yeah, you can get these quick pop-ups, big percentage. You go from 7.92 to 9.8. What was that? 9.88. Boy, that's a 10%. If you get even just most of it, you've got yourself 7-8%. Very nice. But look at the risk. I don't want this just yet. I think there will be a point where it's going to bounce. I don't want to do anything with it right now. So I'm done. So the next question is, where can oil bounce to? If it can bounce, it has to do it within 2 days, and it has to at 8. I'm treating it as the USO, right? Then the USO cannot just stall over here. It has to clear $8.90, and within a day, it can't pull back. It has to go straight away to 9.22, and once it gets to 9.22, it should stall. But if it doesn't, then that's got to be a breakout that takes it right through to leg C at 9.89. I mean, that's just speed is of the essence now if it's going to reverse. Hope that's clear. So I don't want to be messing around with the worst of the worst. There's some other things that are working. Even in, Iran will only accept, let me just see this because this is a very important thing. Oh, well, wrong mouse. Excuse me for just turning around here. If I can actually read it. Well, euros for its oil. Oh, boy, that's right. I forgot all about that. Oh, man. So that's, yeah. The whole thing's getting messy. Thank you. And that was a good piece of information, Gringo. Gringo and Cub, nice that you guys send me emails, and we miss you in the den. Adam, no, it's not. So Julie asked, okay, that's about crude oil in the USO. Be careful. If you are long, I would just say, if you're long with a profit in the USO, either lock some of that profit in right now, or I would put in a stop. It's at 844. If it goes under 840, I'd be out of this in a whisker. If it starts to rally here, raise your stop, and if it hits 888, raise your stop in some portion to about 848. All right, I'll be back. Basil Chapman, Dow's down 49, S&P's down 4. I'll be right back, straight off these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
During the break, just about the bonds, the chart that I showed earlier, the monthly chart is an F/B, alternate count. I prefer to use the bonds because I've had much greater reliability over the very, very long term than the TLT. This is just my own personal thing. So I've got it in leg C in the weekly, which suggests it could make a peak C and then still go into a D. Stochastics at 89% strong. MACD is still strong. I've got one indicator that says a little bit toppy. Just be careful over the next 3 to 5 sessions. Okay. So that's just what I wanted to say. And then, of course, we want to go back. And the question was about the IYT. I was just about to do the IYT. The IYT is the transports, and they made a peak D, very quick. Peak A, peak B, peak C, peak D. And I need to put an up arrow there. And that up arrow suggests that it should go to a buy mode to D, and it did. And that D, in the rule of the Chapman Wave, the quicker you go A to B, but especially BCD, says that you're going to have a pullback, not a major decline, just a quick pullback. We've had that. The big test comes now. Can the transports clear the 126.70s and climb into the different gap downs and get into the 130s in the next week? I am going to give it more than a week. I'm going to say by Friday a week, 10 days. Well, it's only 7-8 trading days, but still, that's what I'm looking at. And the support has to hold in the 121.50 area, and the weekly chart is improving a little bit. So this is a good sign on the shorter term. Let's go to our first caller. We've got Jerry in the Back Bay. Jerry, how are you?
All right, how are you?
I'm well, thank you.
MDY.
So this is the mid caps. Let me just find it. The S&P mid cap depository receipts. Oh, this is upsetting. I don't know how many times over the years I've done the mid caps. So let's just do this. If you don't mind, I'm just going to use this moment because I was going to do it earlier, and the reason why I brought up Larry, that I was listening to Larry's show and he spoke about Bernard Baruch, so we got that out the way. And the other thing is he spoke about the MACD, the moving average convergence divergence. So even before you ask the question, Jerry, I don't want to lose my train of thought here. The MACD, the moving average convergence divergence in the monthly chart, suggests very strongly that not only the Roman candle of August, the wick, has been pierced, but you've got a piercing of the wick of January in the same kind of candle, and everything about it suggests that the low of January, which is the MDY, trading at 228.53, down 32 cents, with the low in January of 220.88. I would suggest that that low is going to be tested, and if it's broken, be careful, because the August low all the way down at 216.91 becomes the next target. It doesn't give you a time, but it does say, and the reason why I wanted to bring it up is that the MACD made its high way back in March of 2014, and then the MACD kept declining and then it flattened out, but kept the green line, the fast-moving average, the 9-period differential, kept getting lower and lower, and the stochastic was making lower highs as well. Only the on-balance volume confirmed the highs that were made right there at 282.41 in June. So that's a month after the Dow and the S&P made their high. Now what's really important is that the MACD and the stochastic are looking pretty much, I'm being kind if I say it's only looking horrible. It looks like there should be a deeper decline based on the same parallel move that we got back in 2008. That's not even the 2011 pullback. So I have to respect what's going on here and say, intermediate term, the MDY, which is a very important, this is the mid caps on the S&P, is not showing any strength at all in the monthly charts. A lot has to happen in the daily and the weeklies to make an improvement. All right, Jerry, your question.
Yeah, I've been short the IWM, and I'm thinking maybe I should switch to the MDY.
Well, they both. You know what? This is very interesting. I looked at this as briefly, and then I completely forgot about it over the last week. So this is kind of refreshing it for me. This made a Chapman Wave stalk leg formation, the IWM, with the leg, the body, the neck, the head, and then the beak is still unfolding. And now we've gone, oh, Jerry, we have gone, yesterday's low took out the low of January. And what's fascinating is that the August low in the IWM was at 103.54. And then we went on to a new all-time high of 129.10. And now we're down at 96. And now we're down 40 points. No, that can't be 30. Yeah, 40 points from the high.
Well, that's why I'm getting nervous that may find support somewhere.
So, okay, a couple of things. If the IWM is going to find support, then probably the MDY will find some kind of support, but not, it could still be weaker than the IWM, but it could still find some support. So let's just do this. The MDY, let me go to the MD. Oh, I knew there was a difference in the charts. I was looking at the monthlies. The daily is different because the daily has gone in the IWM below the left side low of 95.06, and the MDY, the mid caps, hasn't broken that at all. In fact, that's down at 220.88. And the low yesterday was 230.65. That's 10 points, more than 10 points away. Oh, I see what you're looking at. You're looking at the potential for
a deeper decline.
The IWM to now slow down a little bit its decline, and the MDY start to accelerate its decline. I think that's, I like that idea. Although on the other hand, you've got to say, wait a minute, MDY has been stronger. It hasn't broken down yet.
Yeah.
Oh, I know exactly what I would be thinking. You're in the IWM. If you were to go out of the IWM into the MDY, your vulnerability is that because the MDY, the mid caps, have so far been stronger in the daily and the weekly, that the bounce is stronger. So can I make a recommendation just to think about it, because there's actually no real rush to do it right at this moment. My recommendation is have a little patience, and by Tuesday or Wednesday, by then we should have had some kind of a bounce.
Well, wait, this is Tuesday.
What?
This is Tuesday.
Yeah, so I'm looking at next week.
Oh, next week. Okay.
Yeah, so I'm saying at some point this week, if this weakness continues, by Thursday to Friday, we should get some pretty good bounce. That's the bounce that's going to say to you, okay, Jerry, now look at the percentage move to the upside in the IWM. Look at the percentage gain in the MDY. And then you'll be able to say, wait a minute, the MDY is much stronger. It might not have to go down as far, even though the monthly suggests it could. But the shorter term daily and weekly will be the judge. So I'm going to say, don't do anything right now. I would, first of all, you're in a really good position. I don't know if I want to, because if you change your position, your thinking is completely different. Regardless of how well you've done in the IWM, your MDY is your new trade, right?
Right.
So you're starting, psychologically, you're starting all over again. So I'd be prepared for a bounce, and that's where you're going to make the decision to move out of one and maybe into the other. And maybe that's the reason why, if you want to call me on the next
week,
big market bounce, in other words, if the Dow gets back to 60,150 at any point in the next couple of days, give me a call, because that's when we'll be able to check to see what's happening with the IWM and the MDY. I wouldn't do anything right now.
Thank you.
Pleasure, Jerry. Thanks for calling. Jerry in the back. Bye-bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. And before I forget, because of the last segment, you got your swimming lesson coming up. Don't forget, because Steve Rhodes' webinar, I believe it's tomorrow night, Thursday night. And within all the different techniques, he's got something that's very important to the Chapman Wave methodology. Now, one of the things is, for years and years, I've had programmers work on the waveform. I had one fantastic person way back in the 2000s, but we weren't able to work together. But most of the time, people are able just to pick out the A bottom and then count the waves to the upside. That is just a simple technique, but in fact, the real clue is the inside waves and a whole bunch of things. But certainly when you get to the seventh wave, there's a whole bunch of things that go on, and Steve has a very nice analysis of what he looks at in the seventh wave in the Chapman Wave. So the question, DBL was the question, is this some double DBL monthly has not made a leg D yet? No, it has made a leg D. Look, A, B, C, D. It has made a leg D. Excuse me. And it's the double line opportunistic credit something. Credit what? Credit. That's all it says, credit. It's looking very good. And yeah, the monthly is good. The technicals are improving, but it's the weekly that's actually shown that it should make a leg C above 2680, 2603. And that will almost automatically say that we could then get a D. And the daily chart, yes, it's an alternate count, but it's an inside buy mode. Hasn't confirmed by going to a new all-time high above 20, a new high that is above 2603. If it does that, that'll be very positive. There is some resistance at 2613. It's trading at 2590 right now. Yeah, I think this is looking quite good, but I would only start a position here because you need to see how it's going to test 2550 to 2540s. That's really key. If it just touches that and then moves to a higher high, that's very positive. But in the meantime, it's looking good. So I hope I got that out the way. Quick questions here. So, okay, transportation was important. I have to tell you that I'm very cautious here. We switched from the long side to the short side on the Dow yesterday. There was an intraday update. Don't often do that, but there was. And one of the reasons is I think it's a small position, but it's establishing the fact that those monthly charts and the weekly charts are really putting pressure in terms of the wave count to the downside. I don't know if I've got time yet just to show you. So in the analysis, the patterns that we're looking at, the most common ones that we've been looking at, certainly the H pattern is the one, and that's chapter 17 right here, chapter 17, the dreaded H, we used to call it. I still call it the dreaded H, because if the left side breaks, it just goes down way, way deeper. And that's really what we're looking at in so many of these charts. And that's the pattern. Look, you make like a scallop, a little H pattern, lowercase h, and you break the left side low, you go lower. Another scallop, and you make it break it, and you go lower. And then eventually you can get even a larger one. But this is what you have to be careful of. Remember, we spoke about this earlier. The lowercase h can go to an M, and that's just within a trading range. And eventually it does usually, about 90% of the time, it'll test and break the left side low of importance. So these are patterns that you want to be aware of, and we're looking at them over and over here. Here's the very big arch formation in the Dow. So before we wrap up and you go to your swimming lesson with Think or Swim, great show. And, of course, wonderful shows all the way through to Andy Hecht right at the end of the day at 5 o'clock till 6, and he talks about commodities. Look at the way this umbrella, this big arch formation is forming, and look at the way you keep hitting that 200-period exponential moving average. I believe that'll be taken out in the Dow. The 50,880s is really important on the very short term. Once that goes, you're looking at the 15,450, then the 15,370 level. Will there be another little bounce for that H to an M pattern? I'm not sure right now. I think that there's so much selling pressure going on. The VIX is still at 27.22, up $1.22. And that arch formation with that peak C invariably goes to a C minus, and you've got yourself a little Chapman Wave Roman candle. This is tough for me. I don't think the bounces will be more than bounces. I think it's lower lows and lower highs. You've got to be real careful here, and just watch that VIX index. If it stays up here in the 27 to 28 area, it's just tremendous selling pressure. I'll be back tomorrow. Have a wonderful day, folks, and stay tuned for all the other great shows here at TFNN. Have a wonderful day. And, of course, we get election results tonight. That'll be interesting. We'll talk about that tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.